The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good. Look. 81 area to show you what the stock market was doing the last time we had a major election with as much controversy as this. This by far surpasses the Carter-Reagan thing. That was really nothing compared to what's going on now. This is very unusual. Let's just look at the market. In November of 1980, Reagan won in a landslide. You'll notice that the market was going up into March of 1981. It continued to go higher after he was inaugurated in January of 1980. So what happened was, I think it was known as January of 81 is when he was inaugurated. We had that original bust where he said he was going to let the bull loose. Well, you can see what happened over the ensuing year and a half. The market started to go down, and it made a through drive to a bottom on August the 9th of 1982. There was a huge number of conjunction and planetary things coming together there, very similar to what we saw in 1974. And at 775, the Dow Jones was making a 61% retracement of the low that it made back in 1972, I believe, at the 450 or 500 level. I just remember it was 618, but that was a three drive to a bottom pattern. I remember this very vividly because this all started basically, I don't know if you folks remember this firm or not, but it was Salomon Brothers. They were a very, very large investment bank. They competed with Goldman Sachs, Lehman Brothers, Smith Barney, all of those. And the head economist for that organization was a man named Henry Kaufman. Kaufman had the ear of all of the people at the Fed. He was a brilliant man, and his first lieutenant, Jerry Pegnan, was actually a friend of mine. I didn't understand this story until about 1990 when Jerry moved to Tucson for a while. He now lives back east. But what happened was there was a meeting, and Salomon Brothers wanted to go into junk bonds to compete with Drexel Burnham. And Henry Kaufman got up at the meeting and he said, if we go into junk bonds, my partnership is available for 50 cents on the dollar to anybody who would like to buy it. And the chief executive officer, I don't remember the gentleman's name, stood up and he said something like, wow, if you're such a cheap SOB, anybody that wants to do that certainly must believe that we shouldn't go into junk bonds, and they didn't. And you saw what happened to Drexel. Salomon Brothers continued to thrive up until 2000. They got involved with one of their underlings named John Merriweather, who got into long-term capital. They were able to squeak out of that, but they ended up being bought out by Fibrower. But I remember that Kaufman was so adamant about junk bonds that he actually saved a great deal of heartache to the stockholders of Salomon Brothers. But this is where the market started. It's bull market. That was August the 9th. We went up into 1987 when we made a top on August the 25th, which was a harmonic convergence, 5 planets coming together in the sign of Leo. We then had the crash into the 19th of October. That was an exact 61% retracement of that low on August the 9th, and now we've gone a lot higher. The reason why I'm bringing this to your attention is, there's a lot of news coming out here that makes these market move, as we can see overnight. But basically, the cycles will stay the same. The problem that we have here is that the Federal Reserve has this quantitative easing, which I think will be a harbinger of bad things to come, because it just doesn't make any sense to me. And rates have been going higher, even though the Federal Reserve hasn't acknowledged it as of yet. But this is why I'm bringing it to your attention. These cycles and these patterns will try to get you to the promised land most of the time. Now, they don't always do that, of course, but this is all we have to work with if you're doing pattern recognition, because we're not listening to, to the rhetoric that's going on about who's going to win, who's going to lose. We're just looking at the patterns. Now, one of the things that I was asked to do, and that was to talk about, the Brexit thing that we had that was going on, way back in June. And I wanted to bring this chart up to show you the difference here, because see, when we dealing with Brexit, we were doing this for the people in we had a 3 drive to a top pattern up there. We had the ratios present. We had beautiful symmetry between the highs. This was telling me that the market had already discounted, them staying in the British pound, staying in the UK. And again, when the surprise came, you can see what happened. This is a very, very powerful move. And as you can see, it came down to, it dropped well over 23 handles, which is, quite a bit. So those things. I think we got a caller calling in today. We got John from Philadelphia. How are you, my friend?
I'm doing very well. We just are so enthusiastic about all these market moves. This is terrific.
Oh, there's some wild ones, my friend. That's for sure.
Say, Larry, I wanted to specifically ask you, now that a large bounce has occurred, can you share with us your perspective on two things? The NASDAQ 100, which made a high just 2 weeks ago today, October 24th, up at 49.19, and also Amazon stock, which of course is a very large component within NDX, made a high up at 847. I'm wondering, do you have cause to speculate those highs, 49.19 and 847, are key intermediate-term tops by chance?
I think they could be, John. Last night with this emotionalism that we had, we got up to 2112 in the S&P, which is a much better vehicle for trading than the NASDAQ, because the NASDAQ sometimes has a lot of, extra oomph because of Amazon and things like that. But yes, that is a very critical level. And I don't think what's happened now is big enough to really warrant something really dramatic happening. It's got to be something else is out there that's a little bit bigger. If this were really big, the Dow would be up 500 points, and it's only up 200 points. So really, that's not very much, and most of that is a gap up. It gapped up 30 handles on the S&P, and the rest of the night we've been going sideways. So there's not anything really dramatic happening yet. I think the drama will happen Thursday night, around 8 o'clock to 11 o'clock New York time, when we start to see the final tallies come in, and to see if she's going to walk away with it or if there's a surprise somewhere. But we'll just have to wait and see.
Do you have any ideas in advance of all that of where the NASDAQ would be a low-risk short sale?
Well, John, there is no such thing as a low risk short sale anymore. You have to put your stop in. No, or there really isn't, because you see, you've got these guys. I mean, look Friday if someone shorted it on the close. Unless you were talking to Mr. Comey, you were in big trouble. Stay with us, John. We'll take this break and we'll cover some more of this. All right?
Thank you.
Okay.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back with John from Philadelphia, and we were talking about the resistance in the NASDAQ. I've just noticed that Steve Rhodes has posted in the 4763 to 4766 area, which also corresponds to one of John Logan's TAS profiles. So that would be a good area, to take a look at it. Frankly, the markets are going to be open all the time now through the election, which is actually good. You don't have to worry about the Sunday night stuff like we had now. So as long as you put a stop in, you might get a bad fill, but at least you'll be protected. John, are you still there?
I am, Larry.
Okay, here's what I'd like to go through. I just posted into the room the volatility index. What I tried to do is I tried to search for something that would be possibly as good as the British pound, but that was an outlier event. You don't see moves like that very much, which happened during Brexit. But if we look at the volatility index, this has been acting technically as perfect as you can get on a chart. You'll notice the Brexit high that we made back on June 27th, and then we had the collapse. Then we had to rally back at the 61% retracement. Then we backed off again, and now we went up and we made a 78% retracement. If you'll notice on those two charts that both of those moves were exactly equal. So this was my trade of the day, was to to sell the VIX index this morning at unchanged or better, but of course it's gapping down 10%. So there's nothing you can do with this trade. It's basically off the books now, but that's what I was looking at. Frankly, I think this has got more in it to the upside if we get a little back off in here, because I don't think this volatility thing is over. We've been in this range between 10 and 22 for a very, very long time, and we need to get some more volatility in the markets to get more people involved. So that's my 2 cents worth.
Thanks so much for all that input. I do appreciate that. In closing, or in leaving, let me just share an observation I made the past couple of weeks on Amazon stock. Of course, Amazon is one of the most spectacular U.S. businesses growing to where it has, and of course its stock being extraordinarily good as well. I just make note that since 2008, when the stock bottomed $36 or thereabouts, it's had, looking at the monthly chart, 3 very distinctive rally phases. And the last rally from 474 into 847, $373, exactly matched to the dollar price advance from the 2008 bottom into 2013 peak. And sometimes patterns and equality within waves lines up precisely. So I'm looking at that 847 as a candidate for at least an intermediate term high in that stock for what it's worth.
I think that looks really good technically. It's got all the patterns and ratios that you'd like to see. I think your description is spot on with the way I think. Whether two minds think alike or not is any good, but it certainly looks correct from my point of view.
I appreciate all your help today. Thanks so much.
It's my pleasure, John. Anytime. You're a real master of what you do, and you're greatly appreciated here at TFNN. So thanks a lot for calling in, my friend.
Terrific. Bye now.
Okay, let's take a look here at the gold market, folks. This was one of the things that we were looking at to be a short seller today, but unfortunately with the big move we had, we missed the 61% retracement of the high from September by $0.50, and we missed the 50% retracement from the high from way back in June, way back in June by 50 cents. So 1309 was incredibly strong resistance. That was also these old lows that we had back during August and September. That's where we broke down from. We rallied back up to it, and now we're down about $20 so far today. That tells us that is some type of an intermediate high, but if we get above that 1310 level, this will mean that we are going to go sharply higher. What's different about this gold move is the fact that when we take a look at silver, if you'll take, whoops, a sec, here we go, there we go. We'll take a look at silver, you'll see it even clearer because there is a really nice 20-minute line setting there. You'll notice how it hit those lows and then connected to the exact high that we made 3 days ago at 1875. That was also a 382 retracement of the high that we made in June. And then it was also a 61% retracement of the high that we made back in September. So all that's telling us that these numbers have lined up pretty nicely to say we're due for a correction. Really, we've been up for 4 weeks in silver and 4 weeks in gold. So that tells us that this market could easily back off somewhat. But there should be a lot of support in the gold around the 1265 level, and a lot of support in silver around 1770. That's what I'd like to see, a 3 to 4 day down move into that. I would look to be a buyer because then you have a very low risk entry point and you'd be able to get a pretty good idea that whether you're going to be right or not. We'll see whether that's going, if that's going to be the case or not. We're going to have a big gap up opening this morning. I don't think there's any question of that. One of the things that we like to do here at TFNN is to use that amateur hour, you know, that first hour, let the dust settle, see what's going to happen, because there's going to be a great deal of emotionalism. You know, they're basically saying that the thing is over. So, you know, sometimes they're right, sometimes they're wrong. I happened to be in the UK when this Brexit thing was getting ready to go, and the people that I was hanging around with, they stuck by their guns and said, we're not staying, we're getting out. And everybody was, you know, all the news. It was 8-1 were the odds that the bookmakers were giving in London to do that, and you know now we're at almost 4-1 with this former Secretary of the State. So we'll see what's going to happen with the election. It will cause a big to-do, just like we did in 1980 and 81 with Reagan coming in. But it doesn't make any difference. We're going to be all right. You know, we live in a great country. We've got a whole lot of problems, folks, but we've had problems before. And for some reason, we all seem to stick together and work it out. But we will make it through. Maybe not in my lifetime, but we will make it through. That's the main thing that you want to keep in mind. This is something that's going to keep going on and on and on. The only thing that concerns me is the quantitative easing. You know, how is this going to end? It doesn't make any sense because they've extended the business cycle that is usually 4.5 years. They've extended it to 2 cycles now. This has never happened in history. History will tell us what's going to happen, but we won't know that until history has been written, and it's not even in the middle of the first paragraph yet. So we got to be very, very careful. So we're going to have, hold on one second. I've got a trade set up here. I'm almost afraid to bring it up because I've been nibbling at this for quite some time, and we'll get into it in just a little bit here. But it's got all the things necessary, to be a technical trade. So we'll watch this, and when after the break comes, we'll take a look at it, and you'll be able to see what I'm looking at. So let's see how we're going to open this morning. We're trading at around 21.09 right now. The high has been 21.12. If we get above 21.15, we're probably going to go a lot higher, and then we'll see what happens from that point. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I just wanted to start out with showing you this New York Stock Exchange Index chart. You'll notice here that we were down 9 days in a row. That's been the longest losing streak in 35 years. If we went back and looked at some of the other streaks, there have been several days where you had 8 down days and 3 or 4 with 7 down days. That fits in with what Larry Williams has always said about the probabilities. After 3 days, the probability of a market reversing is about 70%. But as you go to day 4, day 5, day 6, it gets all the way up to day 7. And when you get past day 7 and you get into day 8, you're in an outlier event, and you can go to any place you want to go. I think in the commodities, I believe 22 days has been the longest moves up and down, as I recall. That might have changed in some of these other commodities that we've had over the years, have been added since I did some of this stuff, but these are things that we're looking at. We watch these outlier events because, they can be pretty spectacular. This one happened to be advertised, very, very heavily, and that's a important thing to keep an eye on. So we'll look here. We'll see where we opened. It looks like 2110, somewhere in that ballpark. What really surprises me, folks, and this is what I was mentioning before. I don't think this thing is nearly over, and that is that the VIX index hardly gapped down at all. It didn't even, it closed at 20, well, it gapped down 10%. Yeah, so that's a pretty good drop. But that's what I was looking at for something like that to happen, but it's not big enough. With the Dow up 250 points, the VIX should have been a whole lot lower to the downside, in my opinion. So somebody's still taking protection here. This could all change here in an hour or two, but I really believe we're going to see more things that are happening. That's the key, to what I'm watching as far as some of the things that are happening in these markets. Now, there is one particular area that I'm watching that you're going to have to be responsible for yourself, because I don't need the hassle of it. But keep an eye on oil, folks. This oil has got some really good patterns coming in. If you'll notice here, we'll take a look here at heating oil. You'll see that heating oil has got some really nice cycle components that are spot on. It's up very, very slightly so far today, but you've got some really nice things in the oil complex. Looking at the whole thing is just really got some really nice things that are lining up. In fact, if we take a look at the heating oil itself, which we will, just give me a second, you'll see that we've got some really interesting numbers and patterns. Oh dear, hold on just a second. I got to get this corrected. There we go. You'll see that we've got some really nice patterns here. You'll notice those dark black lines I've highlighted to show you equal moves. Those are those outlier type moves that you're looking at. Those are 13 down days where you make a lower low or lower high for 13 days. So we're in one of those in heating oil also. So keep an eye, just keep an eye on that very, very closely. And that's the key to, watching some of these things, whether that's going to be a major bottom here or not. It looks interesting. That's basically the bottom line. I had a question about the gold and the silver. I mentioned earlier that, we run into really strong resistance at 1309 in the gold for the reasons that we already mentioned. The same thing in silver. We got up to a 382 retracement. Those are very important numbers, because if we get above 1309 in gold, there's not much stopping it. And the same thing, if we get above $19 in silver, it's got a long way to go to the upside. What you'd like to do is, if you're bullish, you've been up for almost 5 weeks, very quietly, of course, but you're up for 5 weeks. You'd like to see a very nice, methodical 5 or 6 day, maybe even 8 day pattern to the downside, forming a nice little Gartley, which will give you a really good low risk entry at the 618 or 786. That's what you should wait for. The problem is not everybody has the patience to wait for it, including yours truly. So you have to force yourself, to do that by writing yourself notes and telling yourself that you don't want to get in until you make a retracement, and don't chase the markets. The main problem that most people have when they're trading is they second guess themselves after they've, made their trading plan. In other words, they say, I'm going to buy gold, at 12, 87 or whatever that is. And when gold's at 12.92, you think the bottom is in. So you change your strategy. And then what does it do? It goes right down to where you thought it was going to go. So if you have your strategy, stick with it. And you're going to miss some, but you're going to be protected against some too. So you've got to follow what your rules are, folks. And that's important to do, because the discipline will be the thing that will help you get to the promised land. And believe me, there's a lot of buses heading towards the promised land. The problem is you might not have enough quarters to get on the bus if you keep, second guessing, your entry points. And I know it's difficult, because, this is a game that we keep score by money. And as we see the market move up and down, whether you're long or short, that tells you that you're looking at some really serious things emotionally as that has happened. So that's my 2 cents worth. Try to follow what you plan to do. You have your daily trading plan for the day. And if that works, fine. If it doesn't, go to the next day. You'll be just fine, because, if you're trading pattern recognition, you're going to get plenty of chances, to get in these things without, any trouble at all. All right, let's move on to the next question that someone had, and that was about the Treasury bonds. Treasury bonds look much lower to us. We are at a major bouncing point at that 61% retracement that we made last week at 161.18. We're trading in the 163 level right now. Should we get below 161.18, then we're going to be going down, quite a bit. You'll notice those magenta lines that are there. Those are equal moves. So we could still make that 78% retracement of this last move, down at the 156 and change level. That's, 7 handles away, which is a great deal of money in the Treasury bonds, to the tune of about, $7,000. So sort of keep an eye out, watch the bonds. If we get below that 161.18 level, that would be a tip-off. The next question, the $64 question, is here we are with the Bradley model. And, the Bradley model is pointing down, and here we are into the election scenario that we're looking at right here. But we have very little volatility. As you can see, the narrowness of these ranges that we're having. I mean, this is unbelievable, folks. For the past, since September, we've had a couple of days where it's been crazy, but most of these days are very, very small, much like what we had in July and August. You'll notice when the market was topping up there in July and August, the ranges were very, very small. So these small ranges will, once they expand, will lead to great volatility. And that's why we watch this volatility index, because it's going to give you an idea of when the volatility starts to expand. I think that's the only way they're going to get people interested in coming into the stock market, is to make this volatility expand, because it's like watching butter melt. We're not seeing the same thing in the foreign exchange markets. We're seeing really good action in foreign exchange, and also silver and gold are okay. But the stocks are just, they're basically been range bound up until this last 9-day down move.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we want to take a quick look here at the dollar index. We will bring this up so you can take a look at it. We went right up to that level, 1.27 and 78% level at 99 and change about a week and a half ago. We've now had a pretty nice correction here. We're back down near major support. That happens to be a 38% retracement from the low in August. And that would give us a pretty good support here. We're already trading up quite a bit this morning. We're at 99 and change, 97 and change, because the euro has backed off, considerably. And the euro is 50%. Well, it's actually 49% of the dollar index now since the Chinese renminbi came in to the market. But if we quickly look at the euro, you'll see that on Friday we came very, very close to the 61% retracement, and then last night we gapped down about 50 pips, early in the evening, and then when it was Sunday evening when the letter hit Congress about the FBI investigation, it dropped another 50 or 60 pips, and then rallied back to a 61% retracement, and then started to sell off again. So. Like I mentioned, I don't think this thing is over. There might be some surprises on both sides. Who knows? But we'll just have to wait and see. The reason why I'm saying that is the fact that we're not seeing enough market volatility right now. This has got to be something big, like what the Brexit is, because this is much bigger than Brexit, folks. We're talking about something that, because of the Supreme Courts and stuff, you're talking something to last 20 or 30 years. So it's going to be very, very interesting, what happens here. Like I mentioned before, we are going to be okay, not a problem to worry about anything. The VIX is down under 19 now, which was where I was expecting it to open under 19, because that's, I really thought that the day was going to be tomorrow. I really thought we had a chance to get those shorts on, but now we missed that, so we have to stand aside and see what's happening with the rest of the things, and we'll see how everything goes. Remember, we're still in a pretty strong downtrend from the high we made, way back, in July. So all we're doing now is having another correction. We made a perfect 61% retracement on the New York Stock Exchange Index on Friday. We talked about that here on the air, that we were at some major ABCDs. Our number in the S&P, our first number was 2080. We got to 2079. I mean, that's pretty close. Our secondary number was, of course, 2060, but we hit the exact number in the New York Stock Exchange Index. We hit the exact number in the Dow Jones, and we also hit the exact number in the S&P 500. So all of those tell us that we should get a bounce here. Now, whether it's going to be a 3-day bounce, a 1-day bounce, a 2-day bounce, we'll have to let the market tell us. But with this big gap up, it's pretty tough. Now, we know that the first hour of the day is amateur hour. We're halfway. Let me see. We've only been open 15 minutes. We got another 45 minutes to go to see what happens, because after that 45 minutes are over, you're going to have a pretty good idea if you're going to be in one of these really strong trending days like we get on some of these days, or we're going to have another type of reversal. And believe me, just because the bottom is in doesn't mean they can't go back down and test it. So it's not going to be easy. It never is. But, try to let the patterns, tell you, where we're going. If we get above this 2116 in the S&P level, I have to assume that's breaking out of the 1.618 level number that we're watching. Then I'd have to assume that that's what's going to happen. We're noticing gold here is still selling off. We're now down about $21 in gold for today. That still looks lower to me. I think that resistance we had at 1309 is very, very important. I'd really like to see gold down around the 1276, but I don't want it to get there today. I'd like it to get there, and what I like and what the market likes isn't always the same thing. So keep an eye on that. I have one other great story from memory lane, folks. I was watching the Chicago Cubs victory celebration over the weekend because I happen to be a Cub fan from my days in Terre Haute, Indiana, and I happened to met Ernie Banks several times because he lived in Mark Douglas's building when Mark lived in Chicago, and they had the famous football player Mike Ditka, who was the coach of the Bears during 1985 when they had their championship. And I have a great Mike Ditka story. The Dallas Cowboys did their spring training in Thousand Oaks, California, which is next door to Westlake Village where I live. They would be there during April and May every year, and they would be in the community. You'd see them in the banks, you'd see them in the shopping centers and stuff, and they had a little bar there called Carlos's. It was a little Mexican bar that the people in our neighborhood went to, and one night Ditka was there, and Bob Trouville, who was my next door neighbor, he was also my insurance man, was there with his lovely wife Donna, who was a former beauty queen in the California pageant. And Ditka walked up and said, "Come on, baby, let's dance." And she said, "No, thanks." She said, "I'm with my husband, and I don't dance with strangers." And he grabbed her arm, and she said, "Come on, you're going to dance with me." And of course, Bob stood up, and he said, "My wife doesn't want to, dance with you." And Ditka said, "Well, you don't have any choice in it, Shorty." And of course, he pushed Bob, and the next thing we know is that Mr. Ditka is on the ground. He has a broken right arm, and Bob walks out with his wife. What happened was Ditka didn't realize that Bob Trouville was one of the original Navy SEALs from 1962. And he happens to be an instructor for them. This was 1971 now, so this was quite a few years later, but that's my Mike Ditka story. The Dallas Cowboys tried to sue him, but unfortunately, one of the people at the table next to them was the sheriff of Los Angeles, not Los Angeles County, Ventura County. So that's what happened. That's down memory lane. Let's forget it, move on. We got to get on to the next market here. But when I saw that, I started laughing, and my wife Sarah says, "Why are you laughing?" And I said, "Well, this was the story that I remember. I wasn't there, but my neighbors were there, and we talked about it for years and years." Actually, he's a pretty nice guy, Ditka. I've eaten at his restaurant in Chicago a couple of times, but he is a pretty nice guy. But like most things, you have a few beers in you or something, you get a little bit rowdy, and be like Hank Williams, who knows? Okay, one other reason about the gold and silver why I was a little bit negative, and that is the action in the platinum market. You'll notice here the platinum has hardly rallied at all. We had this 4-week rally in platinum, and it's been very, very minor rally. And so it's selling off again today, too. So that's the main thing. Another one that looks interesting, folks, is, that the copper, with this action that we've had here, copper has been breaking out to the upside. That was a pattern that, if I can just find it, I know I put it in here this morning because I wanted to I wanted to mention it, but as the trading gods have it, I can't find it right now. Ah, here we did. There we go. I got it. We'll take a look here at copper. You see copper, really, look how many days in a row copper's been up, folks. That's a huge outlier event. See, we broke above that 225 level, and it's been, pretty much off to the races. This might mean that maybe the economy is going to start turning around, and maybe some of these problems that we have are going to be fixed. Who knows? Maybe somebody will take a magic wand and just wish it around, and all these debts will go away, and all of our problems will go away. But usually when you borrow that and you don't pay it back, that's not a good thing. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and on Wednesday, November the 9th, post-election, we're going to have Bill Koval of WDK Analytics on, and he has some new information for us. And we're also going to try to have later in the week our good friend Arch Crawford from Crawford Perspectives. So that's what we're planning for the week, and we'll see if we can get Rich Anderson on in between one of these days this week. He's been rather busy, so we'll see if we can reach him. Now, remember, folks, this is a huge gap up, and these gaps are usually filled. This is over 200 points in the Dow Jones. In fact, it gapped up well over 180 because I happened to be at the machine when the announcement was made. I was preparing, for trades for the next day, and when I saw the first thing that moved, of course, was foreign exchange, and then right after that, the S&P, opened up, 20 points, and then the Dow opened up almost 180, and so since that time, been changing around. Now, the DAX did not open up nearly as much, but remember, that's Germany, and they're not involved in this election. They have their own things that they have to get through, so we'll see. We do live in interesting times, as the old Chinese curse. The bottom line is, even if we get a good rally here, I still think we're going to be going lower, only because the patterns are suggesting that we are at a major topping area. And it is whether we get this big rally. Well, we started pretty good so far today, but if we could get a rally over 4 or 5 day or 2 week period, that will probably give us a spot for looking at the short side of the market. But right now, this is very not really much. I mean, we're only up 22 to 22. Well, we're up quite a bit. We're up 30 points in the S&P, which is quite a bit, and 200 and some in the 260 in the Dow. So that tells us that we are very, very strong. But it needs to get up after the first hour of trading here. We've only been trading for half an hour. So in half an hour, when amateur hour is over, you have a better idea if we're going to be trending higher, for the rest of the day. So that's what we're watching so far. Someone's asked a question about the exact price in gold. I'd say $12.75, folks, $12.75.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.